What's up? I'm live again. Um, Not getting a whole lot of people joining, but I'm sharing it late. I'm obviously live stream. I live streamed very little yesterday because it was very busy yesterday. Um, but welcome to my live stream. I'll probably share this to the socials. I mean, I'm still learning a lot about it, and I like the format so far. At worst, it's a journal of my day, and it's at best it'll help some people, and I'll be able to reference back to it, depending on which live stream and things of that nature. But I do think we're at a market point. Market went down 2% yesterday. It's up 0.3% today, and it just I went live yesterday during market hours, and it wasn't too bad. Nobody joined. Everybody's busy, so. But that doesn't mean after the fact it can't be helpful or valuable to reference back to it, either for my partners and investors or just people in general who want to learn a little bit more about investing. But yeah, the market's been kind of took off a little bit in the morning, and is settling back down. And the president made a speech this morning at the Davos Economic Forum, basically saying he's not going to attack Greenland. So, not from a military standpoint, but he seems like he's going to use every lever in his arsenal to still try to take control of Greenland if he can. Kathy Wood is on the air. I'm seeing if I should post this to my socials. So as I was saying, yeah, so I just posted it. As I was saying, yeah, so the market kind of went up. Now it's settling down. I don't know what's the reasoning really, but you know, President Trump made a speech this morning. It's a repeat, by the way, just for people who might be joining because I just posted it. But that he's not going to attack Greenland militarily, but he might do it in other ways, diplomatically or whatever. So, just FYI. At least that's why what the financial media is saying. And I can see that markets generally don't like wars. You know, they like peace. And I watched a little bit of Jim Cramer yesterday because that's the only thing on at around 3 or 4 p.m. And he was saying, yeah, because I keep seeing something in the markets, and the reason why I'm live streaming is because I think this year might be a little different, and some people may be interested in seeing how the baloney is made, you know, so to speak. I mean, and I may be interested in it looking back, who knows, but it doesn't take too much of my time, and it's just I'm doing this anyway, so. Yeah, but I'm seeing something different. I mean, I guess Jim Cramer did an analysis of all these stocks that went up 50% or more, smaller stocks, $1 billion in market cap or less. And then he looked at them, all right, $1 billion in market cap or more, or something around $1 billion market cap. I don't know what his screen was, but then he found like 20, 30 stocks or maybe 50 stocks that went up 50%. I don't know what it was. But the point is, his conclusion was the rally is you're seeing a lot of froth. To him, is a lot of froth in the market. So, because you know the names that he's in love with aren't up. So, I would say he doesn't. I don't know. I don't like that analysis because it's the companies he chose is not necessarily representative of what's out there. I mean, they're still mid cap. How about the companies that aren't up 50%? How about the companies that were up 10, 20, 30%? It just seems like a limited analysis to come up with any definitive conclusions. And so I find that, I don't know, I find that a little strange. But, um, it is what it is. But y'all already know, what my preference is. And obviously with this live stream, I'm actually managing money and investing in stock. So every now and then I can drop some knowledge in terms of those who maybe started a paper portfolio, who maybe manage money on their own and they're actually doing okay, or maybe, but it's not a beginner's course like that promises like, hey, I can make you a ton of money, like Jim Cramer or something like that. It's not a get rich quick thing. And so I've had a lot of questions about valuation, and I have gone over that in my past 2 lives. If people are ever interested, I can, I'd suggest maybe looking through some of those lives and picking out what makes sense for you. But, and I'll review it too as I'm going through the actual processes of what I look for and things of that nature. But a lot of it is in the intelligent investor. So. Yeah, but I did a very short live stream yesterday. The markets were down. At least for me, I'm seeing, it feels like it's different this year. That's why I'm live streaming as well, because I think it could be different. I think I said it last year. I said it this year. I said it in my letter to my partners. I am seeing a broadening out of the market. Contrary to what Jim says, I'm seeing something different. That's the best way to put it. I mean, and I kept, I kept saying that yesterday too. It's about valuation and value, and it's. I think it's more important than ever. Well, it's always important, but it's more important than ever. The market can be very exacting in terms of how it, it can be very exacting in terms of in the long run. It is a weighing machine. I'll repeat that too. I'll repeat a lot of concepts because this is what goes through my head every day. It's what I go through on a daily basis to keep me disciplined in capital allocation. So the principles don't change. And I also want to provide an alternative to all the mess out there that I'm seeing. There's a lot of mess out there. There's a lot of channels on TikTok. There's all this stuff, and it's a flood of information, and it's bad. I mean, it's a lot of it's like, hey, do like I do and you get rich. And it's just, I don't know, maybe this could be an alternative, but I think as long as it doesn't take a ton of time during my work days and like during my actual trading hours, I'm okay with keeping it live. Like if there ever comes a day where it gets, overbearing, I may, put a pause on it. But because I really, I need to be doing what I love, not live streaming. I just thought it was interesting too. I was like, as a money manager at any big bank or at any institutional investor or any money management fund in general, like how many people are going to live stream their day? And it's not a lot, but I actually started the company. And I raised the money, so I'm able to do this. And like I said, it's, it's just something I thought of. I thought it might be interesting. On it, obviously, I wish I could just cut things up and make it more organized and stuff like that. It's just, not in the cards right now. It just isn't, so yeah, but I'm seeing something different in the markets, that's for sure. I won't share what Jim Cramer shared in terms of advice yesterday. I keep knocking on Jim Cramer because it's like, I don't know, he's been doing it for a long time, and I know people close to me, people in my circle are listening to him, so it is one of those things that I don't knock on him because he's out there doing what he loves, but it's more, I'm going to see something different. If I see something different, I'll say it, and I see something different than what he's seeing. Like he's basically saying, like, if the largest companies aren't going up and these are the highest quality, his whole thesis is the Russell 2000, which are smaller cap company, are lower quality companies. And his proof is he did the screen, and I don't know. I don't know how that's a complete analysis, I guess. And I can only go off of like what I see, and what I see is, I think value is going to be very important. Not value stocks, but it's just like valuing a company. People like to classify value stocks, growth stocks, but valuing a company is going to be as important as ever. Having a system, having discipline, all that. So it's funny, like YouTube TV, if there's no commercials, they play like polar bears and pandas. It's like, it's just funny. I'm surprised they aren't able to sell article or advertisements. So again, I'm seeing a broadening of the market. It just continues. I obviously don't know if that's going to change. It's just, but what does that actually mean? It just means like money's chasing, value, and looking for situations where, the price actually justifies the purchase, things like that. Maybe it's not all about price earnings multiples, because those can be really misleading, but maybe the price earnings is cheap, like lower or cheaper in comparison to the growth or whatever it is. So, but you'll never hear me talk about stocks or talk about my book or anything like that. So I hope you don't tune in expecting like a Jim Cramer or like a TikTok of people talking about their stock ideas. I talk about general categories. I did that as a money manager for clients, high net worth clients. So, and so I'm happy to talk about general categories. But even then, it's just my recommendation for most investors is just to buy an index fund and continue to contribute to that. The live streams are nice. They allow me to just record and just set it and forget it type thing. Probably need a better camera, but all right. And as I shared yesterday, Warren said many times, if you're serious about money management, you take the time to look through every single security in the stock market. Ideally, stretch goal doesn't mean you'll do it, but definitely something to aspire to. I'm curious, like if Jim Cramer ran that same screen, 50% up for like mid cap stocks, if he'd find the same like speculative companies, because like 50% year to date, that's like 3 weeks. I would think any company that's in that category, you got to be careful. I don't know. But I also know how difficult it is to, look at the entire market like that. And hey, you work with what you have and the time that you have. And Jim manages, this foundation during the day, does other stuff as well. So. Yeah, I don't like if the company doesn't even have revenue, though, like I agree with Jim yesterday. I mean those are not good companies. You would not believe how many listed companies don't even have any revenues. You would not believe it. And that's really not my game. You got to know what your game is. And my game isn't to, buy those type of companies. Because the number one rule I probably said it before, and I think it came from Buffett, is to don't lose money, and rule number 2 to money management is don't forget rule number 1. I made a few stock trades this morning. Nothing big. Again, tactical, all tactical. You know. But yeah, I was I like being at my desk at 6:30. It doesn't mean I'm, I could, and I don't care if I'm in PJs or not, as long as I'm working and I have the, flexibility to be able to on breaks, then, you know, eat breakfast and stuff like that. So, um, but yeah, what is it, 10 a.m.? So, gotta look presentable, and not for the cameras. I just like looking presentable anyway, because I think I mentioned it. It's just a good best practice. Even when I was working from home during COVID, I would I would wear what I wore to work, each day, because you're still on camera, and there's still meetings, and you still go outside in public, and stuff like that. So it's kind of like, yeah, I just you got to change into something unless you're gonna wear PJs all day, So, but Jim's advice, based on what I'm not gonna say Jim's advice because I thought it was bad advice. That's what I'm saying. But based on this limited analysis, he advises users to take action on his limited analysis. I'm not going to say what he said because I disagree with it. And that's why I encourage people to index. But then yesterday, after I turned off the cameras, what I do? I watched the Kings game. The Kings got stomped, and then gosh, it's cold. You're gonna wear. You should, so this is what I will do because I have a home office. I wear the same sweater like a million times because I don't care. I mean, I want like that blue one that I wear all the time. It's hella warm, but I washed it over the weekend. I'm not. It's not dirty. Hmm. I may not see your chat if you ever chat with me. I didn't see my friends chat like when on my first stream. Um, and I may not have time to answer it like especially during market hours or during the workday. But towards the end, I could probably get to it, or I'll just hit you up afterwards.
Order filled.
Making moves. No, I'm kidding. Traders, they'll be doing hundreds of trades, buy, sell, buy, sell. They're probably doing it the whole day. And what happens is they kill it all through commissions and taxes, kill all their gains, and they probably end up losing. So, gotta be careful. Yeah, I just feel like this year's one of those years like you don't want to be a hero. I think Warren Buffett says you don't know who's swimming naked till the tide is out. This year could be one of those years, for real. And I know people may not believe it, but there's been years where we have negative returns, as well. So, um, not to say that this is one of those years that I know ahead of time. It's just I don't think people. I think people think it's like it's not possible anymore. Maybe I don't know, but it's certainly possible. This light's weird, but anyway. And by the way, I'm allowed a money manager even when I'm managing money on my own. I talk out loud a lot. It's not always a good thing, especially if there's a stream going. So I've had to make a few adjustments, but we'll see how it goes. Like I said, I don't know. I mean, it may just be 1 week on, 1 week off. I have no idea. What I do know is I'll be working. That's for sure. Either way. But for sure, I'm making the only thing I can rely on is my valuation. And I think that's been, one of Warren's strengths is how disciplined he is, with what he does. I just think there's been so many people in the market that have just had it easy for the past 3 years, and I know investing is not that easy. It's just like at any point, like had you started, you know, in 2023, you'd think you're a genius. So, hmm? Huh? Man. Mm.
Order filled.
Stocks, I've noticed, is a little bit more volatile this year than last year. I mean, they're always volatile, so I'm gonna grab some coffee in a second here for my second helping. I was in the gym yesterday, no, last week, and I was doing sit-ups with, weights, and I was on an incline, and my back was starting to hurt, and I was like, man, because I've been working on my lower back as well, but I'm getting old. I'm not doing those anymore. I just need to do less weight on my sit-ups, I guess, but I'm getting older. right. See, I'm switching back and forth between managing the portfolio because it's live, I've read most of the information on it, but and researching new stocks.
Order filled.
I like some Shark Tank. I like it sometimes. Oh yeah, yesterday I got back and I was just doing more accounting. Yeah, that's what I do after market hours, and it could be for long day. It can make for long days. But um, it is what it is. This is what I signed up for. So it's not all glamorous all the time. There's real work being done. I gotta get more. I'm yawning like crazy. This is crazy. Oh yeah, I didn't sleep well last night. Maybe Jim Cramer scared me. Shouldn't be watching Jim Cramer. I'm kidding. I sleep pretty darn well. Usually. But I'm up early. So alright, so like I said, I have hunches and a long term strategy and a long term really it's the same discipline, right? And I continue to execute, based off that, no matter what the noise is. And I'm glad I did, and I continue to. Warren likes to say he puts things in the too hard pile. It's too difficult, too tough. He puts it in the too hard pile.
Order filled. Order filled.
Don't let that activity fool you. They're usually not gigantic moves. Yeah. Or else your long-term strategy will never work. You're not going to have a long-term strategy, right? Whatever your long-term investing plan is. So whether you're indexing or investing in individual securities, you gotta let it play out. I've learned the hard way, but it's in terms of not letting certain themes play out before you even see the results of the fruit of your labor, And in this game, in the investing game, there's a lot of patience involved, I keep saying, I say too much, so I'm gonna try to cut that out. But in conversation, I say it because it seems to engage people. It is not like a presentation, so this is kind of welcoming you into the viewer into what I do on a daily basis, and along the way, you may pick up a few things. I get questions about. There you go. I say again, but I get questions about valuation a lot, and I can't just put together. Like one video on that. It's an art. And it everybody's going to have different ranges as far as what they think a certain, what they think, how they think a certain company is valued. Everybody's going to come up with a different value, and it's going to be dependent on your knowledge and things like that too. So, but the range, hopefully it's not too far off, but that's what makes markets as well.
Order filled.
And that's why if you're investing, you can't handle the volatility. You may want to allocate some of your money to bonds. There's an aggregate bond index. It's literally called an aggregate bond index, and you can buy an index of bonds. I think 20% bonds in a portfolio is actually pretty low. I think I've said that before, and it helps. It can help offset some of the volatility of your portfolio. So, but you just may not get the full return of the S&P 500 in the long run, well, in the long run, you definitely won't get the returns of the S&P 500. It's just Graham used to say it as well in terms of Benjamin Graham. If you have a compulsion to make moves, you can do that between your bond and stock allocation a little bit. But in general, you should really stick to a plan. And it's not crazy to put more bonds in your portfolio as you age, as you get older. And that's what a lot of the target funds do. So you won't believe, by the way, a lot of these corporations that got rid of their pensions, and you won't believe how many company pension plans are underfunded. And now it's become a municipal issue as well. I mean, you just have these assumptions on these retirement plans that are way too optimistic for their allocation. They're like maybe 50% bonds or something, and they think they're going to get more now than 15 years ago in terms of their assumptions, and it's crazy. I've seen entire companies set up just for the people to retire. I mean, that's how big the obligations are. They're not making any money, and then this pension obligation is crazy. So it's a tricky game. Like, it's not doing that well, but it's got this huge pension obligation. It's doing well enough, but everybody's going to retire, it seems like. So but you may see me replacing my talking out loud with facial expressions, because this is how I roll. This is day in the life, There I go again with the. So again, for those who missed it, Donald Trump is not planning to attack Greenland physically, I guess, militarily. So I guess, yeah, that always is a positive thing for investors. Like with my, and I keep saying it, with my assets under management, I should be able to find opportunities. I mean, it should be a lot easier. And I am, you know. Little rally here. We're seeing a little rally again in the market. Don't know why. Again, it's just daily fluctuations, you know. See, some people may have just woken up and started trading. You know, that's why it's important to get up early and get ahead of it, because whatever theme, whatever information that you've got, you know, you can use right away. I could use right away. So, but it's tough on the West Coast. It's really tough to start working at so early. You know, um, like I'd say most of the portfolio managers who work on the West Coast don't do that. They just, you know, they work regular. They may work a little earlier, try to get in a little earlier, but for the most part, they work regular hours. By the way, I was going to go into position sizing, and when I worked at, you know, the trust companies that I worked at, that includes BNY Mellon and then obviously Bank of America. Um, there are trust rules that basically, when you get to 10% or more of your portfolio, um, And I think this is a universal rule for certain, just I think trust companies in general, that it shouldn't be 10% or more of your portfolio. A position shouldn't be. I don't always adhere to that, but it's been a good guideline, and I would advise that for investors as well. Ideally, um, ideally you'd be indexed, but if you aren't, or you have a smaller portfolio of individual stocks, hopefully you're diversified. You have 15, 20, 30 stocks. And what's a decent position? uh, One of the PMs who I learned under was like, 3% position's a pretty solid position of your portfolio, of the whole portfolio. And so um, I don't know about that. It's like if you look at the S&P 500, there's stocks in that are 0.5%. So even less. So, and not that you're sitting there comparing yourself to the S&P 500, but the point is, if it's a stock that's not 0.2% of the S&P 500 and you have 1% of it, you have a lot of it. You may have a lot of it, but if it's a good stock, it may be worth it. So, but in general, you should be diversified. And I said funds are better than individual stocks, but honestly, there's so many funds and ETFs nowadays. It's just as hard to pick a fund as it is a stock nowadays. So that's why I'm like, you got to be really careful. I don't care if the bank picks it or if your employer picks it or whatever. You really have to. Um, you have to do some research even on the funds. And there's tear sheets. They're called tear sheets and prospectuses that you can read what the fund holds and how it's performed over the years and stuff like that. So life just gets a lot easier when you have the ability to buy an index fund and set it and forget it. Have a program, set it and forget it.
Order filled. Order filled.
I mean, I think a 3% position of your portfolio is obviously a solid position, and I think that is pretty accurate because a 2% position would be considered a hedge. So, um, you buy something such as precious metals, for example, just in case it goes up a lot. But then if it goes down a little bit, you're not afraid, or a lot. Even if it goes down a lot, you're not afraid. But so yeah. let's just say this: the unloved stocks in last year that were just kind of left in the dust for everything else that was, demanding all the attention. They're getting love again, and I think it's real. So, um, um, so stay indexed and stick with your investment program. That's how markets work. That's how value works, I use charts on my phone. Some charts. Hold on. Hmm. All right. Let me see. Hold on. And like I said, you should always look through the auditor's report because it may say some pretty revealing stuff. Like sometimes you see a company, you like it, then you do some more research and you dive in and maybe you buy a little position, and then as you get to know more, you can buy more or sell it. So you don't want to do that every time because you get into the wrong stock that you don't know enough about and you can get burned. So um yeah, I try to do as much research as you can as possible, but there is such thing as establishing, a smaller position at first, and then as you get to know more about it, because it's like you really should read through the past 10 years annual reports, ideally, or at least the annual report from 10 years ago compared to this year, and see if the CEO has delivered on his or her promise. See if the strategies change. See if they're just chasing what's hot. I'm gonna switch this up a little. Had to make a few adjustments for the screen, but not too many. And you don't have to understand every stock. You don't have to understand everything. You don't have to be everywhere and get every, you should know your circle of competence, know what you know what you don't know, and stay within that circle. And really all you need to do is win on one or two, if you are picking stocks and you are starting that paper portfolio, or you are just testing yourself, or maybe you do feel confident in your stock picking ability. But my point is, if that's what you're doing, is picking stock, then like I said, I mean, Warren likes to say you only need to get rich once. And if you know the company, it's undervalued, and you buy a decent amount of it. Like I said, position sizing is important. You don't need to go crazy, but maybe out of your portfolio, like a 5% position is pretty big. 10% is really big. Like that's a concentration in the money management firms that I used to work for. It's called a concentration, and it's usually targeted to be pared down. So, and I passed CFA level 1 a long time ago, and they talk about that a lot. And just managing portfolios professionally as well. Every time it's 10%, it was a problem. So, but of course you can make exceptions if something's really, really good. You feel like it's really, really good. But I just would, if you're not experienced in it, I wouldn't make that a habit, of going really big on things. Because you can mess up, especially if you're not sure how good of a stock picker you are. But again, this goes back to this why I'm a big fan of indexing. You don't even need to do all that. Yeah, this isn't. Markets are interesting. I mean, I'll give it that. I'm not a trader or nothing, but like a stock trader. Like I don't day trade, but every buy and sell is a trade. So when you hear me say trade, it means I might be adding or subtracting to a long-term investment that I have. I don't day trade. And like I said, valuation is such a tricky. It's different for everybody. So there's let me show you something. This is a book on valuation. This has got to be by Demoterin, isn't it? Oswath? No. Oswath has one too. But this one is by, I don't know who it is. What the heck? Was this for one of my MBA courses? I doubt it. But the point is, there's like people write entire books on it. I mean, I keep it pretty simple. So I think it's simple compared to what I've read. But the point is, there's whole books written on it, and if I can drop some nuggets of knowledge every now and then, obviously I'll try to in the moment. I think it's even more interesting when it's in the moment and it's relevant to that day and that time. And it helps me. It's like I don't this is what it helps me in terms of this is what I'm thinking through as I buy companies. That's how I think about it, by the way. I'm buying companies. I'm not buying stocks. I'm not trading stock. I'm buying companies that I invest in over the long run. And that's how I hope my viewers think about it. Or yeah. I'm going to make fun of some CNBC contributors when I'm on this, by the way. Every now and then. But they're doing their best, right? They're journalists. They're not like stock people. So they do their best. Some of them are. Some of them are industry people. And they still don't get it right. But that's my point. You can by indexing. And like I said, have your funny money. And I said 1% on my first live. I think that's too high. You know, like do a little bit, you know, but ideally you do it in a paper portfolio. But if you were like me, I don't learn unless I like risk real money. So maybe risk a little bit of money. I think everybody's got a little speculative portfolio or whatever. Maybe not, but I don't like losing money, so I don't have a speculative portfolio. I don't gamble. None of that. Yeah, you're starting to see stocks rally again. A little bit. Not rally, but go up a little tiny bit. If we've learned something from this president, though, don't like make big moves based on what he says. That should be in general, but especially with this president, stick to your investment program. Tune out the noise. There's a lot of noise. You know, some of his pronouncements may be noise that you need to ignore. But it sells. I'm gonna get some coffee. I'll be right back. I still got some things to do, so I'll be right back. Trust me.
Order filled.
Yes, that was me having a brain fart or thinking. That's the thing. Like half my job is to think through problems, think through issues, and think through investments before I make them. Oh yeah, the market's big time rallying again. I don't even know what's going on. Sometimes there's no reason. That's why it's dangerous to be out of the market. You just never know when it's going to rally, you know? Out of nowhere, folks. I don't know what's going on. Oh. I was about to get some coffee. Crazy. Michael Jordan shrug. That's all I can say. Dropped yesterday, pops today. If you're trading, the brokers win. You don't win. That just woke me up. I didn't need no coffee. I'm not a chartist or anything like that, but helps me get a read on what's going on. And if it aligns with my longer term strategy, which daily fluctuations, you're not going to be able to tell. Oh, crap. Okay, maybe a tweet. Okay. Reached a framework with NATO.
In Greenland, if the United States were to attack and try to use military force, as the president said, and his staff
Backs off Europe tariffs. That's what happened. Again, you gotta ignore the headlines. If you trade it in and out based on that, it's setting yourself up for failure.
Order-filled. Order filled. Order partially filled. Order filled. Order filled. Order filled.
Yeah. Now the market's giving back some of the gains.
Order filled. Order filled. Order filled.
It seems to be a great time to get us started. Are we down to 2 now? Are we down to the guy on the reader has so we're down to 2, we're down to 2, and I'll probably we're down to maybe 1. But and I would say this is really impressive. Yeah, for a lot of the betting markets at Bush, Rick is very good. All three would be, I think, whenever Robert will demand that's there now, I said, he's too late. He's always too late, except when it comes to politics, where the other side, where he was actually too late. Another one, the person I would bring, that person forward for Treasury Secretary. Yeah. He made the point that he only wants to stay where he is. That's one thing. He's fantastic, but Scott only wants to stay where he is. His point, as a real estate guy, some people say he always wants lower rates, but Scott made the point that if you have productivity gains, whether it's from AI or whatever it is, that you, the Fed chairman, can't get too agitated about a hot GDP number. In other words, we might be at a point where we could run nominal GDP at 8%, or after inflation. That doesn't mean that it's inflationary. I mean, you need to raise rates. So if you consider someone that could be like a Greenspan, that's what I want. Right now, if you announce great numbers, the stock market goes down. Because they say, they're going to raise the rate, they're going to kill it. Which really stops you from having any great runs, and we want to have a great run. So we're going to be at 5.5 or something. We have predicting. I don't know, it's much higher than they thought. But let's say we're at 5.5, we could be at 10, or we could be at 12, we could be at 15. But immediately when they announce good numbers, now in the old days, in the old days, the 20, and then sure, you look good, whatever you do. But look, Joe, in the old days, when you had a good run, you didn't announce good numbers, and the stock market would go up. Now the stock market crashes every time we have good numbers because they think everyone's going to raise rates. And wealth is not a big cause of inflation. In fact, it can go the other way. So look, we've had tremendous growth, and we have almost no inflation. For the last 3 months, we have 1.2% inflation, and yet we've had tremendous growth. Do you, at this point, have plans for what he would do? And you said you want projects out. Let's say he decides, I'm not going to be pushed around, I don't like the way I was treated, whatever he decides. But what if he decides to stay on the Fed? He doesn't need to lead school. We'll see how it works out. I mean, that could create a block of 4 people that we just, in this world, we live with the clergy bill, and if that happens, his life won't be very, very happy out of it, but he wants to get out. He has not done it. A small little complex, Federal Reserve complex, I could have redone it. I could have fixed it for $25 million a little bit. I think he's up to almost $4 billion. The most expensive project ever built per square foot. And he's either incompetent or he's crooked, I guess, right? But so we'll find out. So if he stays, he stays. If he doesn't stay, does it? Do you know what his salary he took this job, and they're up to almost $4 billion for a little building. I'm building this massive wall, and I'm way under budget. It's going to cost less than $400 million. It's going to cost maybe $300 million for this massive project. I just spent, recently, we recently I moved out of town and out of Waldo in Washington, and I spent $250 million. It's a much bigger complex than the federal government, much more complex. So I say, how did I spend $3 to $4 billion on this little thing? I could have done it for $25 million, and it would have been nicer than what they're doing. Does Tom tell us, I know that he's not to be a senator much longer, he probably could prevent someone from being a law discipline that is still an issue? Or just a couple, do you know anything about what would be necessary for Chair Powell to answer for to where this would be the thought? So, no, I don't know about that, Dennis, but he's not going to be a senator to me. But you figure that whenever you nominate, it's going to be an easy life. Whatever happens. Because we don't have a lot of time, I was going to read a little bit about Senator Elizabeth Warren and a meeting with the Warren. That's something that wasn't on my plate. She was very happy with this one. I tell you, you already had a lot of policy discussions over the credit card companies are getting 28%, 30%. These people don't know they'll pay that, right? And I said, 1 year cap of 10%. And I love it. I know it sounds like the mayor of New York maybe came up with that, but the people are paying. They can't make it. They can't pay 28. Whatever happened to usury, they can't pay 28%. And so I said, 1 year. I'd like to see a 1 year cap of 10% for the credit card companies. And they understand that. I've had calls from credit card companies, people that are friends of mine actually, and I treat them good. I respect them greatly, but they make a lot of money. They got to give people about 28% interest. People go out and buy something and they pay 28%. They end up filing for bankruptcy. So I would like to see that happen. So there's, I guess, there's classic conservatism, there's populism, and I guess there's common sense. Is that how you would describe some of the steps that you made? How you use statism, or that we're getting too involved with managing? I think a private sector, I think a private sense. You can say, being conservative, and I'm a common sense person. I do things that aren't necessarily that conservative sometimes. And like men and women sports. Okay, people think it's wonderful. I think it's a horrible thing. I think it's a ridiculous thing. Open borders for everyone so that everybody's prisoners can go in. We're coming from the Congo, we're coming from Venezuela. Thousands of dollars. And we're but we have to do too much to make it it's too expensive.
Order filled. Order filled.
Hmm. All right.
Order filled. Order filled. Order filled. Order filled.
Markets have been all over the place today. I probably lost a lot of people, but the market went all over the place today. There seems to be a push and pull of the broadening out trade, and that's I think that's going to continue to be a theme. Holy volatility. That's all I can say. Oh, wait. Hold on. All right. I know I'm going silent a little bit, but overall, a volatile day. That's why I went silent. When it gets busy, I'm gonna go silent because these are busy days. Market days are busy days, but I still want to show folks, like, not show folks, but just like welcome people into the life. This is the life. You see it in my facial expressions. Probably, I'm not very good at hiding like what I'm doing and how I'm feeling, and I'm human. As much as I say you should ignore volatility, stuff like that. It's still stuff if it's big moves, I try to tune in a little bit and see how I can further see if my longer term thesis still holds, which it wouldn't change that much either way, but on the margins, maybe I can help in for an active manager like myself, it could matter. So that's why I do it, but that's why passive investing is just tough to beat. You don't have to worry about any of this. You get really great returns in the long run if you continue to contribute, and you don't got to worry about any of this. It's, I want to, like I said, I want to show another side of money management, the real side, on a professional level, and so folks can see it's like this is the real deal. This is how people, this is how money managers think and portfolio managers think. So generally, though, if for people who like focus on the fundamentals of a company, if a market goes crazy, it usually potentially means stocks are getting bid past their intrinsic value, what investors like to call intrinsic value. And if that happens, investors who aren't willing to pay more than the stock's intrinsic value, or what they feel like the stock intrinsic value is, are more likely to fall behind. So, I mean, and that's why I spend a lot of time before bringing investors on, before bringing partners on, letting them know, we're sort of educating them to that very aspect of investing, and the money management firm that I manage. So how they should think about volatility, how they should think about investments. And and that there's no reason to panic, and to try to think as objectively as possible. The most objective way, though, is by buying things that you valued carefully, and with the margin of safety. So all I'm really doing is saying, hey, how can I further these long-term ideas? And there's always better long-term ideas, obviously. It's easy to fool yourself into thinking that makes trading okay. But anyhow, I'm gonna lock in for a minute because there's 10 minutes left in market hours. But I really like thinking through things. What's going on? 9 minutes. Like I said, hold on. I used to work for this PM. I used to have this mentor. I'll put it that way. That didn't like trading in odd lots, and I do it all the time. Meaning, not like in 100 shares, because it's like only retail traders really trade in odd lots, and it was a pet peeve for this. It's kind of like a coaching moment to like don't trade in odd lots, basically. But as a retail trader, it's as a smaller money management firm, let's just put it that way, I trade in odd lots. I don't mind. It's okay. I'm sometimes more concerned with position size than odd lots, because I'm usually pretty exacting with how much I want to dedicate to a particular position size. Because you don't like, if it's 10%, it better be like a superstar stock, and you better know it. And the downside better be limited. Is it like so? Yeah, so you should feel that very rarely. Feel that you need to have a 10% position in your portfolio. Well, most investors shouldn't. They should just index. That's what I'm saying. All right, let me just check this out real quick. I'll trade in odd lots all day, baby. Not too good for the odd lot, that's for sure. I guess this could be educational for some, right? Who knows? Video on demand, you pull it whenever you want. Fast forward to what you want. Fast forward past the silent parts because that's when I'm trying to work. But I talk so randomly. I realize it's just probably hard to follow, but it's on there. It's on there somewhere. And obviously, if I have time, I could make it a highlight. And actually, YouTube will sometimes create it for you. And in investing, you're sure, but you're not always sure. So it's kind of like you have to always double check yourself and keep learning, and be open to new ideas, stuff like that. All right, we got 3 minutes left. Just doing some research, stuff like that. Because what goes up today may be down tomorrow, but you can't get excited about anything that happened today. It's smart to think long term and have long term ideas in place. The market is it can be a very perverse place. There's this book called Bull by Maggie Mahar. I gave it to my nephew. I need to rebuy it because I gave it to my nephew. But one of the chapters says when the last bear was gored, meaning in the market's closed. So let me just do some market closing stuff real quick. So when the last bull is gored, when the last bear is gored, that's when the bull market starts. And she's talking about secular bulls, meaning long-term bull markets. And so stocks are the same way. When you feel like giving up on them, and you're giving up on your strategy, and when you've heard enough pundits tell you the wrong information or whatever information, sell now, get out of your investment strategy or whatever. The funny thing about markets is the more people that are bearish about the market, the better it is for prices. And so when people are down on the market, it actually could be a bullish indicator. It's crazy. So, but yeah, when everybody's happy and everybody's clapping and everybody's, your cab driver is giving you ideas and feeling good about the market. When everyday people are making easy money, let's just say on whatever, there's been a lot of ideas in the past. There's been a tulip mania. When it seems that easy, be skeptical. And this is obviously for the active traders. The passive ones should just continue to invest. Or continue their investment program. The passive, meaning the ones that are indexing, are passive. Active is like you're trying to pick stocks and pick the best funds, and you're picking active funds that sit there and try to beat the market, stuff like that. But passive investors who are indexing should just continue to stick with their investment program, no matter what. So I've seen people try to get creative with it, and they'll get scared and they won't contribute when the market is down, for example, or they'll contribute more when the market is going up. And I hate to say it, but investors tend to do the exact opposite of what they're supposed to do. They hold on to investments too long, losing investments. They don't keep winning investments long enough. So they look at a loser and they go, dang, it's down 90%. Like, I'm just going to keep it till it goes back up. Right. And then when something, let's just say, goes down and then it goes back up to break even, and then they sell it. Right. So there's more than just numbers and valuation. There's psychology that goes into it as well. And the market can trip you up. And that's why it's tough. It's a tough game. When everybody's saying, hey, why aren't you buying XYZ? Why aren't you in XYZ? When everybody's, you feel crazy. You feel like, wow, I don't want to miss out. But the problem is, like, it's bad for your financial health. It's not like a concert where you're like, hey, I don't want to miss out. I really want to see this concert. If everybody's watching that same concert, like, it's probably an expensive concert, and unlike a concert, after you buy this whatever stock, you may not have this feel good feeling that a concert can bring you afterwards. There's some may say a real going to a concert's like a going to a concert is like a priceless experience, or traveling or something like that. So you get this priceless sort of experience out of it. Whereas a stock, when you buy a really popular stock or fund, let's just say, there's a real chance of capital loss. And in investing, that's when you tend to be upset with the results. There's no feel good feeling. There's no priceless experience. In investing, it's either, and I guess you can keep a stock for sentimental reasons, or just because you feel like it, or, I've heard of that, where people buy a stock and they want to keep it just because, not for profit purposes, or so they say. But my point is, and maybe I've been in I have 2 business degrees, so maybe it's because I've been in business too long. But the point of getting into business or risking capital or anything like that is to make money, ultimately. And when you buy something that's popular and you don't want to miss out, many times you're buying it at the exact wrong point. Sometimes, many times, I would say many times, especially for the everyday investor. And so when you do that, you become upset. There's no, so FOMO is really bad for your financial health. So the market went like this. Then went like this. Last 2 days, so it's been a little chaotic. So I'm joining my own live for the first time.
But what is that act?
Oh, cool! You can actually like rewind it and stream it from the beginning while I'm streaming. That's sick. I didn't know that. I'm like repeating everything because I'm like, oh, if you just joined, because I see people pop in every now and then. I don't know what I'm doing, so it's okay though. I'm gonna eat lunch. I'm not gonna end it this time. I'm not gonna end it this time. I'm not trying to go for some like record. But I'm probably not gonna. We'll see what's up. We'll see what's up. So I haven't eaten lunch. So I'm gonna go eat. I uploaded a short of my bumba hue that my mom made for me. I visited her over the weekend, and she packed me some bumba hue, so I ate it on MLK Day, I think, and I uploaded a short video on it. But I ate that at my desk. It was bomb. I usually try to eat at 12, but it's been chaotic. What can I say? Yeah, it's I don't know how other active managers are doing it, but I feel like it makes a difference I feel like it makes a big difference. I don't know if it's psychologically, because like ultimately my long-term thesis is still there. Like I'm not going to change the discipline just because XYZ stock. XYZ is an actual stock, by the way. So I'm not talking about XYZ stock. I'm just saying some anonymous stock, some stock that is just going crazy. I'm not going to change because of that. I'll always look at it to see if there's something I'm missing. Of course, I mean, I think that's natural, but I also have to admit when I don't know something, and when something's outside of the discipline that I have. Like for example, like venture capital investing. That's not what I do. That's when you, on a concept, you make like 100 bets, and then one or two of them pay off really big. I can't afford to do that. I don't have capital to throw around. I started with a very small capital base, and it's grown quite a bit due to performance as well as contributions over the years. And I've done that a certain way, and I don't want to get away from that. And I think, yeah, that's when you have to be honest with yourself. The market's closed, so I'm like getting all theoretical and talking more, but supposed to get coffee. I was supposed to get coffee, and then the market jumped. Which again, I still stick with my philosophy, like I said. But my point is, I gotta go eat, y'all. I'm hungry, so I'll be I'll be back. I'm gonna leave this all open, so I'm gonna mute CNBC though, because I might get in trouble for streaming that, and it's not my whatever. It's not my content. My computer shut off. Sorry. I don't know what happened. I'm grabbing lunch. I'm gonna eat at my desk, but that's weird. My computer shut off. I didn't do that yesterday, and I was gone for like, well, I guess I was gone for like 15 minutes. Huh, that's weird. I went on standby. I don't know what's going on. This is not my thing, but I'm doing it anyway. I'm trying to do it. Back. I'm eating what the Vietnamese people call bánh tét, or for Hue people, bánh tét. Different dialects. And then I don't know what these are even called. In English. But it's for Lunar New Year coming up soon. We celebrate it. Chinese people celebrate it as well. But I know not everybody does. And put a little pepper in it. I already ate a little bit of it, but it looks like this. There's pepper in it. Stuff like that. It's traditional. I used to my parents used to make it when I was smaller. Now we buy it, but they used to make it, and it would take all night. It would take so long, and I know I must have helped because I dreaded making it. We put it in this big garbage can, put like wood underneath it, and it I think I must have helped wrapped it with banana leaves or something. Because I just remember being like, no. And recently my sister texted the family and was like, hey, we should like make it. So, because all the kids, her kids, my nieces and nephews are interested in learning more about the Vietnamese culture, and absolutely, it never crossed my mind that I would want to go back to those days where I'm making them. It's not like it's like the worst thing in the world. It's just when I found out we can buy them, I was like, that's the best thing ever because they're difficult to make. I don't even remember what role I played. Probably none. No, I must have helped. I used to help out a lot. But yeah, I used to spend a lot of time making these traditional rice things, like rice patties or something. They're wrapped in banana leaves.
IPOs that are going to supposedly come out. SpaceX. Do we have the appetite?
I think they're very healthy thing happening, which is when humanity was
I feel like I should play like music next time I'm on lunch. I'll play some like EDM or something. It's like sweet rice wrapped in a really tight roll. And in the middle, you pack meat. Usually, this was vegetarian, but you wrap it in a banana leaf and then you cook it. And apparently, they did it this way because it would last longer in the middle of the war. And I guess I don't know where I read that, but I know it's supposed to keep for a long time wrapped tightly like in that manner. So I showed it to some of my Chinese friends, and they didn't know what it was. So congrats to Indiana. All the people jumping on that bandwagon right now, though. Oh, I knew it was the best team in the country. It's crazy. It's crazy. All right. Well, like I'm gonna try that. I'm gonna try that EDM thing. I'm not gonna even leave for that long, but and I'll rewatch it, see if I need to improve on anything. Not a bad idea. Play music when I'm on break. But I usually don't listen to music when I'm working. All right. So after hours, market hours at least, I try to do some research here and there, administrative stuff here and there. Oh yeah, I'm getting all these hate comments in terms of when I express that Notre Dame should have been in. It's always the same thing. Join a conference. Should have beat Texas A&M. Should have beat Miami, who both were national championship contenders. A&M only got beat by a national championship contender in Miami. So it's like those were their two losses by 4 points total, and they ran over all their other opponents. So, and these aren't like JMU type opponents. They're good opponents. You know, they could be good on any given year, and I've seen them be good on any given year, or ranked on any given year. So you just never know. So everybody's like hating on it. It's just funny though, like, and I've said it on my threads, college football is the only place with coaches, whoever it is, and fans who think that a win in the regular season is the same as a win in the playoffs. Like, yeah, okay, Miami beat Notre Dame in the regular season, but in order for that to have been considered a legitimate national championship run, you should be playing against the 12 best teams and win again in the playoffs. That's like saying, how many basketball series would we have? You know, of course, football's a little different. There's less games, but how many basketball playoffs would we have not had the benefit of watching had they eliminated a team because they lost 2 times in the regular season to the other basketball team? No, they play in the regular season, and then hopefully they meet again in the playoffs, and they really show who's the best. And that's how it should be, you know? But then I realized Kai Trump went to Miami, Rubio went to Miami. I'm thinking that's how I mean, geez, makes sense how Miami got in now, you know? And then Alabama was complete horseradish, right? So 3-loss team. But the losses that Miami had were just absurd. So they'd rather overly punish teams that could be ranked in winning against teams that could be ranked in any year, but weren't, that Notre Dame beat. So they'd rather overly punish that than a team that loses against like a no-name unranked team, but then wins against some of the best teams. So you can go in there, pass OChem, fail, I don't want to insult anybody, but fail geography, and then you're still considered a top candidate somehow. And some may say, well, geography is not part of it. Okay, so fine. Oh, okay. So they may say it's not part of your concentration or whatever, or your major, but it's like, okay, so you fail OChem, or you pass OChem with flying colors, and then you fail, let's just say, I don't know, arithmetic, algebra. You fail algebra, not calculus, algebra. Your major is engineering, or let's just say pre-med. That doesn't make sense. Like who would sit there and say, yeah, that's really deserving? And then you do that a few times through the season. Pass physics. Again, you fail statistics. Or maybe it's the other way around, So I don't really get that logic. And I think that if you lose against really bad teams, that should say something, about the team. So I know everybody's keeping it political, saying, oh, I'm not arguing that Miami shouldn't have been over Notre Dame or anything. No, that's what I'm arguing. I'm arguing Notre Dame should have been in over Miami because they improved over the year while Miami sort of stalled and probably declined. You can't just show up to the test last minute, have turned in none of your homework and expect to pass the class. We can't be setting that type of precedent, especially for like young kids. These are kids playing football here. So just keep that in mind. You want to teach them life skills, right? You can't teach them that, hey, you can go lay an egg and play down to your opponents and still get in the national title game in the playoffs. And I'll tell you what, Notre Dame would have been Notre Dame would have had as good of a chance or better than Miami in terms of winning it all. And I do think they could have beat Indiana. I think they could have beat Ohio State. Everybody's like, oh, last year Ohio State got killed them. No, the coach did what he did last year against Notre Dame and stopped taking risks at the last minute and almost lost the game. And he lost this year against, I forget what team, for doing that. And then another time for taking an unnecessary risk on going on fourth down. And it didn't seem like anybody had the momentum or anything. And I guess his logic was there's enough time in the game to where we can make up for this mistake. So late in the game, he won't take the risks. Early in the game, he'll take the risks. When it's not even necessary. So I just felt like that type of risk taking by a coach, he's bound to, and I think Marcus Freeman, the mistakes he makes, he tends to learn pretty fast from it. So I think they would have been much more prepared for Ohio State this year. But anyway, markets are still trading. They trade after hours. They trade all hours, by the way. Especially the larger stocks. I was like, it's kind of weird that I'm wearing the same sweater twice in a row, but I feel like Mr. Rogers had like the same looking sweater every day, like the same uniform looking thing. So I'm fine. If he's cool with it, I'm cool with it. I legit thought John Summit, when he was talking about DJs being lazy, not on top of their game, and not working, I thought he was talking about I really thought he was, and he might have been talking about Calvin Harris, because he got Calvin Harris got rich, and then you stop hearing from him altogether. But I know he made some bad business deals, like Calvin Harris did, so he's probably got to get back on that grind. No idea. I gotta get my blood. I gotta stretch, I can't just sit all day. I didn't know this, but this show after the market close was inspired by Jim Cramer. So he's been a very influential part of financial media.
You should be wiser in the second half of your life than the first half. And if you and you should be wiser in the second half of your life than the first half. And if things have worked well for you, you should be a better person in the second half of your life.
I wonder if they're gonna have a free replay of his life and legacy documentary. I thought it was really good. A life and legacy. Huh. Play.
Introducing the 5-year business boost from Comcast.
I'm waiting. But it is also true that a few years ago, and it wasn't more than a few, I began to get older now.
Maybe you have to like subscribe or something. It's okay. I recorded it, so I'm all good. If I need to rewatch it. I already read a little bit of some newspapers this morning, but I'd like to, check up on them, see if I missed anything. But I see a lot of it here. There's a pod, it's called Squawk Pod, and it's apparently free, where you can re-listen to Warren Buffett, A Life and Legacy. So I would check that out. Just Google that, Warren Buffett, A Life and Legacy, CNBC replay, and you should see that. I thought it was cool. I mean, I always learn from Warren, and his voice is weakening every year, and overall, and he's declining. He says, once you start declining in old age, you decline pretty fast. And I seen that with him, and very sad, but still as wise as ever, just like Charlie Munger in his waning days, which at least his mind never seemed to wane. So obviously, by the time I got to see him on stage with Warren Buffett, he was in a wheelchair. So that was in 2021. 2021, 2022 is right after COVID. But I knew the end. Most people know the end is near when people are at a certain age. So you just never know. So I worked with my margin of safety and got in there as soon as COVID was over. I was like, I gotta go see Charlie and Warren, and then they did one more, and then everything changed. It is what it is. It is what it is. But those are legends. I went to, and I think I said this in one of my podcasts. I went to Charlie Munger's annual meeting as well, and he is he's a marvel. He's a wise person as well. It was cool to see the A's players in the community.
Moved in the summer of 1943. My dad first lived in Fredericksburg after he got elected, and he got elected in the fall of 42. We moved the family back to this area, but my dad thought Washington was kind of a sin city, so he thought that the three children should not be raised in an area like Washington, D.C. So we lived in Fredericksburg. My dad had a little apartment up here. It's about 50 miles away. And that did not work out well. And then that summer, the family decided.
There's some replay hacks, like fake, like non-licensed replays on YouTube of a life and legacy of Warren, but it doesn't. I don't think it shows the whole thing end to end. Better than nothing, but it's got that podcast. It's on the. You can see the non-video version, but I think you'd. I'd prefer the video, but. management books, by the way. Anything by Jack Welch. He's a no-nonsense guy, straight from the gut, in terms of how to be a better manager. I didn't continue the CFA because the whole reason why I was doing it was not only to advance in my money management roles, but also to ultimately start a money management firm. And I realized you don't need it to start a money management firm. And so I was like, what am I doing? Been wasting a bunch of time because I already have 2 business degrees. I have formal money management experience. Or I had someone say, oh, you only have, what is it, 4 years of formal money management experience? That's nothing, or something like that. There was a senior manager, I won't say where or who. But I had someone say that, and I was thinking, like, how many do you need? Some don't have it, some have 0. Charlie Munger had 0. He's a legend. Warren probably had like 2 when you include all his years with Benjamin Graham. I wouldn't count classroom learning as the same thing as working for Graham. But he had some security sales experience as well, which is a little different from money management. And it's funny because he had another offer, but he couldn't go because he was doing some military service or something, the National Guard or something in Omaha. Or else he would have took that. But instead he had to defer, got this second offer from Benjamin Graham, his professor at Columbia and hero, and ended up working for Graham for 2 years, got offered a partner position, and decided that he wanted to kind of do his own thing. But he could have taken over Graham's firm, which was a very small firm, probably maybe 100 million, something like that. In today's dollars. Anyway, I've got a lot of books I can recommend. I'll do it over time. There's too many good ones. And I'm talking about business books and investing books. For whatever reason, there's actually, it's just only one person I've ever met who was like this, but I would say I read a lot. And then this particular individual would get worked up about it. It'd be like an ego contest in terms of, like who can read the most. And I want to be clear. I'm not saying I read more than anybody else. I like to read a lot, and I read business books mainly and investing books mainly. I do read other books, only because Charlie Munger encourage everyone to be wise and read widely. So, but it's not my thing. I'll read science books here and there. I'll read broadly, but my main thing is business biographies, business books, investment books, management books. That's more of what I'm into. I recommended a couple of my previous 2 lives. I recommended one today. But yeah, Shoe Dog was good by Phil Knight. Intelligent Investor, I'll recommend at every opportunity I get. See, I don't even like listening to these people. Just every now and then I'll look and see what's going on and do the opposite. No, I'm kidding. Partially kidding. Because you know what they say, right? Once it makes the papers, it's already baked into it's like already passed. The newspaper is backwards looking. So actually, once you see it in the paper, things may be changing. Or in today's world, in the online periodicals or on the news or on TikTok or wherever you get your news. I'm seeing all types of people put out all types of stuff. There's your your finance BFF. There's all these people who they've created a huge following, and yeah, I don't hate on it because it's young people making a living, and I'm all about that. By the way, I'm all about the entrepreneurship. I don't care if it's about like I see these young folks like their whole like life is around podcasting about raves, but I don't care. Like they're trying to make it work, you know. So I think it's great that people are out there hustling and trying to make a living. To be honest, I just whether you're established like Jim or whether you're newer and more amateur and you're just putting out content, you know, I just because the problem is people consume it and then they follow what they hear, especially from like influential people who we don't know how they went about getting their followers. They could have gotten their followers by being very charismatic and having this great editing skills on video, which I don't, or whatever. But then they may have no experience whatsoever other than I don't know what they pick up and read and regurgitate. Maybe I have no idea. Like I don't know how people choose who to listen to in today's online world, but I have seen a few on my feed, and I'll click on it just to get in the algorithm. I don't care. Um, but then I'll look at it, and it's like people talking about what they've bought and sold, and they have huge followings too. And it's like, oh, I bought this stock, and I did this, and I made XYZ money, and they make it sound very easy, obviously. And I don't know what the rules are around that, but if you make any type of money for recommending securities, you need licensing. Um, so I try to stay away from all of that just because there's liability involved in that. And it's a conflict of interest. And I don't believe in it, actually. I don't believe in doling out advice like that. Otherwise, I would. I mean, if it was that easy, I'd just say go buy XYZ and get paid on it. And, they're called stockbrokers, I guess. They don't even do that anymore. They do financial advising and all that to make it more comprehensive. So, but there's still people who get paid off that. That's not what I do. And in all of my roles, I was always, the best way to say it is I was always a fiduciary. And made money not on transactions, at the very least. My current role, it's more performance based, but my previous roles were more fiduciary based, based on assets under management. It's a percentage off assets under management, which I think is better than transactional, making money on transactions, which I think most firms do AUM nowadays. But that has its pitfalls as well. So I won't go. I mean, that's sort of the world I came from. So I don't want to bomb on it all the time because it's. I think it does serve a purpose. I mean, I was in it and I saw how useful a good financial advisor could be, to basically keep you out of trouble. Keep you diversified, yada, 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 and, the ones I worked with generally, top of the line, because there's way worse, there's way worse that, from no name firm out there just doing whatever, so, um, so yeah, I mean, I guess it's funny though. Warren came from that world too. He was a stockbroker for a long time, but not a long time, but a little bit. And the point is, he didn't like it either because that's what he would get paid on. He'd give them an idea, they would pay him for it, and they would take the idea, and then that would be it. And as a salesperson, I think he struggled doing that, which most people do in that field. So I don't think it's fair for him to say he's a bad salesperson, because obviously he had to be somewhat of a salesperson to grow his company into what it is today. But I think it's about not needing to sell. You just believe in it. So you talk about it and you believe in it. So you just naturally sell it. I was in a sales program at Bank of America though, and I sold loans, credit cards, things people need, right? So it was easy. It was an easy sale. It wasn't a hard sale. I was in real estate before that, and that could be a harder sale. I mean, buying a home, selling a home. So I became a better salesman when the product sold itself, basically. Yeah. I mean, that's how I see it. There was bad salespeople in small business and mortgage, of course, everywhere, right? But I was always really honest with my clients. You can ask them. I reached out to so many business owners in Fremont to get them a credit profile. So when the pandemic hit and PPE money came out, I believe funds got dispersed to those with credit profiles first, which I blanketed Fremont with, credit profiles essentially. And that's how you build credit. You have to build credit just like you do personally. You have to do it with your business as well. So and unless your business starts building credit and building a credit profile for your business, as in a business credit card, you won't qualify for that loan that you need down the line, or that line of credit you need down the line, or that PPE loan when the pandemic hit. So, I like to say, and I know for a fact, I know for sure that many of the small business owners I served in Fremont probably were helped by that credit profile that I set them up with. So not tooting my own horn or nothing, but that's what I mean though. The product sold itself. So it's useful. I mean, people's lives change when they can grow their business and manage their money in a way that they didn't know before could grow their business. It can be dangerous too. Borrowing money too much can be very dangerous as well. But that's not what I was doing. I mean, and if it was anything more than like a line of credit, you'd have to be carefully underwritten. So, and that's where a little bit of credit analysis comes in, debt service coverage, all that stuff, which I still do. I still do for bigger companies. But that's more of a secondary, because if a company's bonds are worth nothing, their equity will be worth nothing. So really the first stage is seeing if the company's even creditworthy. Do they have debt? I mean, that's the fundamentals of reading a balance sheet, things like that. So, and an income statement. Right, like I said, right now I'm doing more administrative stuff. Just figuring out returns, stuff like that. Accounting for contributions and stuff like that, and withdrawals, like, yeah. CNBC is my favorite business channel, though, by far. I've watched. Sometimes I'll switch to Fox during Kramer, just because. I mean, he's on right now.
We didn't send 100% airborne into Copenhagen. President Trump said there ain't going to be no war and even promised not to hit our allies with tariffs. Because he, quote, formed the framework of a future deal, unquote.
I'm not gonna play the whole thing because I don't want my live to get flagged.
I think be the best deal ever, even exceeding the Louisiana purchase. It really can't make this stuff up, man. Yet it's true. As I was waiting on TV this morning for Smoke of the Street, stock futures were weaker. Step by step, inch by inch, they were going down. Then President Trump spoke, sounded a minute piece, and then it starts work. I was like, that happened. I turned to my colleague, David Baker, and I said, Greenland invasion ruled out. Here comes the futures. And that's exactly what happened. It's insane. It really is. But the market only finished up today. Dow rocking 589 points. S&P closing up 1.16%. NASDAQ finishing up 1.18%. As war was tapered, and then a framework for Greenland occupation seems to be in the offing. How the heck did we get to this crazy point? But first, I like to put it in open hand. Let me just say I hate talking politics. It's not my area of interest or expertise. Looking forward. For most of my professional career, politics didn't matter. Regulators can matter, budget deficits can matter, government shutdowns. Most of the time, the president doesn't have much impact on the stock market, at least not on a day-to-day basis. The last president really got involved in markets, except when one of Biden's aides drew up a list of our friends to determine which companies could get NVIDIA's latest chips. His regulators tried to block virtually every vertical chip, but the White House itself wasn't regularly moving the market. The White House didn't see this. They were oblivious to this place. Believe me. Even in President Trump's first term, we didn't directly try to move the average, simply the economy goes up with COVID. This time, though, Trump, too, is so different, it's crazy. From trade policy to tax policy to capital return policy or military policy, ramifications to the stock market are more important than anything other than the direction of interest rates, both the long rate set by the bond market and the short rate set by the Fed. And remember, Trump wants to set those two. All you stock market corporations knows everything this president does, and I think he knows it. I remember when he called the bottom after Liberation Day dropped this quickly by posting on True Social that it was time to buy stocks. A great time to buy. David Faber and I were on the desk trying to figure out dispassionately what could happen. Well, it turned out the person was right. It was an amazing buyout. Which brings us to the Greenland enrollment. The president's been skimming over this Greenland issue for a while. We have a lot of history with Greenlanders here. U.S. Air Force Base built during the Cold War. It's very important to our nation's defense. Some might argue that we should have sovereignty over such a critical base. But then let's remember NATO. We run NATO until very recently. It might as well have been on U.S. soil. But this president does respect Denmark or NATO for that matter. He sees angry the whole Scandinavia because he wants to help the global east by possible. And up to the history, yesterday we were concerned that Trump might decide to take Greenland by force. The notion that would actually put a war with our allies over Greenland, of course, was totally absurd. But because this president's willing to use pretty much anything in the U.S. arsenal to get his way, from tariffs to bombings and kidnapping world leaders, sellers took control of yesterday's session. They were scared. Normally, you expect interest rates to go down as people seek the safety of treasuries. Now, this time, NATO members own about $3 trillion worth of U.S. bonds. Why they hold them if they're worried about the United States declaring war on them? No, not that. So sellers swarmed in Trump treasuries ahead of the pending U.S.-Denmark war. When rates shut up, we saw credit move out of high-priced to earnings-roll tech stocks, as well as anything related to housing. That was really yesterday in the market. The latter is brutal, by the way, because the president was going to authorize buying mortgage-backed bonds. Bring down rates. Yesterday was like that way in the corner. So even though DR Wood, the largest reporter, reported pretty good quarter, stopped that question. That was a Greenland. Today, though, we got to take the Greenland worries off the table, not just the possible invasion, also the threat of tariffs and screwed the higher. So they're going to give them, which took $9.56, or 2.5%. That was the Greenland peace dividend. Of course, that everybody went right. It's not about this perspective. The president's also decided we're buying something because he needed to get housing prices down. He signed the executive order banning it. Others, I don't think he has the authority to do that, but like with the tariffs, yeah, the Congress reports seems really push back. They don't even care. And it reiterated the 10% cap on credit card interest rates, something that I believe would be an economic disaster.
So he's going to paper over what he recommended yesterday. People do this morning. It is what it is. But I think the bigger lesson is, don't jump in and out of the market because of headlines, especially from the current administration, because I guess it's a negotiating style where he goes, or maybe he's just mistake prone, where he puts out something that's ridiculous or something, markets drop, and he pulls back on it. Just kidding, markets rebound. So in general, I would just stay invested and stick with your investment program if it's passive investing. And if it's even active investing, I didn't sell out. I wasn't like, oh my gosh, 2% go to cash, like 2% down, go to cash. I didn't do that. So not that cash is a bad thing. I had a PM, one of my mentors. I had many. I worked for many portfolio managers, by the way. But one of them would go through the portfolios and be like, oh, you have 3% cash or 2% cash, get it to no cash. And of course the market is rallying when this happens. And long story short, that of course I invested, but then the market gives back some, and I had a better buying opportunity had I had cash. We invest for the long term anyway, so you don't want to sit there and time it too much, but if you think stuff is overvalued, especially in the stock market, or if you're investing in stocks, then it pays to be patient and wait for what Warren calls a fat pitch. You don't have to swing, and it pays to be patient and wait for a good swing. Now, you can wait too long sometimes, though, which I didn't feel like it was the case when I was kind of told to invest all the cash. It ended up working out, but I really, at least in the short run, I was like, you know what, that's pretty well invested. I might wait for some better opportunities, so, and we are active managers, so it does, it could pay to wait and be patient. And that's just a larger lesson. But when you're working for demand, when you're working for, especially the retail investor, I was working for mainly wealthy clients, but the level of wealth varied. And so a lot of people call it, I guess, tracking error. If you fall behind your benchmarks, it can look bad, especially when things are rallying. So, and this is probably all across the industry, that you want to not have tracking error. So, you don't want to fall too far behind. You don't want to look a certain way, yada yada yada. So, I get it, but I think, if, for example, in Warren's case and in my case now, you get to choose who your partners are, and you get to work with who you want to work with. And so, and I always tell my investors and my partners, like, please, understand this is a long-term investment, 3 to 5 years. You may see some underperformance some years, especially when the market is rallying like crazy. So, and so it's set up a certain way, and I choose my partners and my partners choose me. And so it's so much better to have patient capital. And that starts, I think, with the actual portfolio manager. I have to set the right expectations as well. I'm blabbing because obviously it's time to eat my broccoli, time for the administrative part. These are good. Jim's interviews with high level executives are good.
Coming off the good of 2025, and really the outlook is for 26. It does seem like 2026, unbelievably, looking very well. You're saying, yeah, it's going to be a better year than last year. Absolutely. Listen, when you listen to the second last year, 2025, you actually got a lot of questions. You really did get a lot of questions. Like, how are they going to manage this supply loss of exclusivity? What's the net negative impact? Maybe you guys and how you guys have been talking about it. Well, number one, not only innovation, but I think it has some pieces in there. Look at pharmaceuticals, $60 billion in revenue, 58% per year, 5% per year. That's really great. Look at $4 billion plus the farms next. You know, look at I feel like now you're strong in the areas of pharmaceuticals, oncology, immunology, neuroscience, and then with the separation of orthopedics, you'll have vision care, you'll have surgery, and you'll also have cardiovascular and vision care. Vision care brings us to great places. It's unbelievable. We've been able to be in contact with a great actually material, which is extremely
I did lats yesterday, so I'm struggling. It's like I used to never get sore if I like work out consistently, and now I do, but it's all good. At least I'm getting out there and moving. That's really that's my expectations have been lowered as far as like working out because I've noticed I get injured much more easily and for longer now. So my goals have decreased. Expectations have decreased on myself, and now the whole expectation is just to get out there and move because obviously I'm sitting in a chair all day. So I'm not barefoot. I'm wearing Uggs. Get some water. Walking around a little bit. Get some water. And this is why I need to work out. Well, I shouldn't eat that much. I shouldn't eat that much candy. It's just I only eat a little bit, but I like bite-sized. Anyway, before I shut it down, we reviewed a few things today, and yeah, I mean the market was all over the place today. It was pretty volatile, I would say. The lesson is, don't abandon your long-term investment plans. Have a plan in place. Have the discipline to stick with it, because you saw it. And all the people out there, please don't start teasing the president and saying taco. I know that's a popular thing, but when he pulled back on his tariffs, people started calling him taco. And I'm like, well, so you want really not well thought out tariffs? You can say, he didn't think that one through. I mean, but when you tease him and call him taco, that means if you make a mistake, when you make a mistake, you expect someone to stick with that mistake no matter how bad the mistake was. And I think that's not something we should encourage. We should encourage, like, if you make a mistake, to correct it and do better, and so I hope Taco doesn't start I hope people don't start calling him Taco because he decided not to invade Greenland. I think most people are breathing a sigh of relief. And we should have felt the same way when he went back on his tariff threats on Liberation Day last April. And instead, people were making fun of him, almost egging him on to, like, put him back on, which to me is like nuts. I was like, so you want the market to crash? This is silly. Like, we do silly things. We say silly things. The internet is crazy. But let's be smart about it. And we should be, if people make policy mistakes and they make errors and they go back on it, you can ding them on that, but let's not egg people on to, like, the equivalent would be like to call them chicken now. Oh, you're not invading Greenland, you're a chicken. It's like, no, you're not invading Greenland or whatever. Great. You have a diplomatic option. Great. So, anyhow, tariffs can be just as damaging. I think even Warren Buffett called it out during his last meeting, which he mustered up so much effort to finish. His voice was given out. He was a soldier, but one of his things that he was saying was as far as about policy is tariffs are an act of war. We should view it as equivalent, right? It destabilizes trade relationships. You can attain peace, as we can see, through trade. You can also mess up relations through messing with trade agreements as well. And then, without getting political, one more topic is we got to stop allowing people to trash people because they come from countries or they come from areas that aren't as developed as the United States. And that's, calling out Somali, people for, stereotyping them as like their country's known for, nothing or whatever. I'm not going to go into, you can Google all the stereotypes, but my point is, the United States is extremely blessed with natural resources, with a lot of things, and it is very developed. But if we're going to apply that standard to Somali people, then that would apply to a lot of other people too. And it is a little unfair, and I would say even discriminatory. I'll say that. Because it's well known that, for example, Africa, certain parts of Africa are not fertile. It's just worse land. It's not arable land. Versus the US is abundant in arable land. So even if you wanted to develop certain parts of Africa, you couldn't, And are they worse people because of that? No. It would be equivalent. And, so to be blessed and to be lucky and to have a lot of resources and an extremely fertile land with a lot of natural resources like the United States does, we should be thankful and also realize it's a lot of good fortune too. So anyway, that has to do more with economic development and what is this book called? It's called well, there's a lot of good books on countries developing and stuff like that. And I read it it was recommended by Charlie Munger, who's a super Republican, but it's a book called Guns, Germs, and Steel. There's a book called How the Scottish Invented the Modern World. There's a book called The Rise and Fall of Nations. Is that what it is? Hold on. The Rise and Fall of Nations. No, is that it? No, that's not it. The Rise and Fall of... No. Anyway, there's a really good book on I'm going to remember it. Watch. I'm going to remember. I'll tell you tomorrow. But the point is, it outlines from a world perspective how lucky the United States really is. So anyhow, I'm going to sign off. This was a full day here. Well, I didn't loop y'all in, obviously, right when I was working, but I think thanks for tuning in, all those who did. Make sure to subscribe if you haven't, and I hope to see you on the next one. End.